I did it. I sold the house, and it was a very scary thing to do. Everyone said I was an idiot. I put all my money, the equity, about $250,000 into silver at $9. And I sold it at $44 and built a dream house, turned it into $1 million. What does the modern monetary theorist want? I.e. the number 2 in charge, Lael Brainerd at the U.S. government, the consolidation of the banks. And this is exactly how you do it. You incentivize people to overextend, whether it be in their business operations or in their asset purchases or whatever it may be. And then you raise rates 11 times in a year and a half or whatnot. And now they're talking about not maybe pivoting. In fact, you got Lauren Summers coming on saying, I think they're going to raise rates. Well, we've been saying that. We've been saying they're not going to lower rates. They can't. If they do, they've lost all credibility.
Silver continues to show signs of strength. We are currently testing the 200-day exponential moving average, which of course will capture a lot of attention. Above, we have a significant barrier in the form of 2350. That is followed by 2450 and then eventually $26. When you look at the action of silver over the last several years, the area between $22 and $26 has been an area of intense focus for the market. On today's news, spot silver gains with focus set on FOMC minutes. The FOMC minutes could provide more clues regarding the timing of the central bank's potential interest rate cuts. The Fed is anticipated to cut the federal funds rate as soon as June, according to a Reuters poll of economists. Lower interest rates tend to decrease the opportunity cost of holding silver, which pays no interest. To conclude, Federal Reserve Bank of San Francisco President Mary Daly acknowledged remarkable progress made on inflation, but also noted there was more work to do to ensure price stability. Now, we'll show you more clips of Andy Schectman making sense of this news, but first hit the like button, smash the subscribe button, and check our pinned comment for some massive sign-up bonus as Bybit gives you free $20 to trade crypto just for creating an account. So you can start trading Bitcoin within an hour. Let's get into the video.
Country's making a decision that, look, we don't need to settle in dollars and we don't need to save in dollars and in treasuries. And that is why you don't need to have a BRICS currency per se, just an agreement amongst these countries where now 35 more countries have joined, 20 have expressed interest on top of the 10. You put that together with the Belt Road and the Eurasian Economic Union and the Shanghai Cooperation Organization, you're talking almost 9 out of 10 people on the planet. If all of these countries say, you know what, screw the dollar, we agree to trade with one another using our local currencies. And, I got that first ever trade last week using Project M-Bridge, which is the bridge between central bank digital currencies. And in this case, it was United Arab Emirates trading with China using the M-Bridge, which sidesteps SWIFT. So now they have a way to trade outside the SWIFT system using their own local currencies, accepting their own local currencies, and then putting the excess into gold. And in the case of China, you have all of these countries like Iran who have been doing this for a very long time, sidestepping U.S. sanctions by trading with China, selling them their oil, getting yuan in return, and exchanging it immediately into gold on the Shanghai Gold Exchange for delivery. So, again, the recency and the normalcy bias of the dollar bulls will be to their unwinding. And a guy like Luke, who is so smart, and he's really, I put him at the top of the list in this industry of economists intellectually, but he's spot on there. You don't need a common currency to massively distort and disrupt the reserve and settlement, well, let's call it the settlement and ultimately the reserve status of the U.S. dollar. It's happening in real time, and that's what that chart shows you.
Yeah, it certainly
does. But honestly, everything is on sale, and it just makes no sense to me at a time when we're seeing record withdrawals coming out of the big exchanges, i.e. the sophisticated money front running. The retail public doesn't get it. So it'll be that way until it changes. And I've been saying this to you now since late November. Best time I've seen in literally, if I put it all together, in my career right now to be buying metal where it should be way harder to get and way more expensive than it is. It's the value of a generation if things go the way I think it will. So everything is on sale right now. And all you need to do is send an email to arcadia@milesfranklin.com and ask for a price sheet or questions on anything, because our price sheet that we will send you is much more competitive than the one on our website. Ask us for any questions, anything you've heard on this interview, or questions on precious metals IRAs, or just want the price sheet, and we'll send it to you and do all we can to make doing business with Miles Franklin a good experience.
Well, I sure appreciate that. I know that there's a lot of people in our audience who appreciate that, have taken advantage of that over the years we've been doing this. So, Andy, thanks again for joining me this week, and it was great to see you the other night. And
we will do more of that, Chris. You're a good friend and someone I'm very proud to be associated with. I truly am, and little by little, I hope you and I make a little bit of a change. But like I told you a while ago, I will ride shotgun with you for the rest of this crazy year, and I promise you that between now, the 200 meetings in Russia leading to the big BRICS meeting in October and the November election, that there will be lots of crazy days and lots of crazy things to talk about. But
now Andy Schectman explains his legendary trade in the silver markets and gives you an honest opinion on how he expects the market to unfold so you can profit from this opportunity.
This is a once in a generation type of deal. And some of it will be linear, and then the rest will be exponential. And that's why I talk about this little by little by little by little, and then all at once. And if you look at the progression, it has been somewhat linear, but the exponential part of it hasn't happened yet. And I think that's when it becomes an awakening by the mainstream, who says, how the hell did this happen? But guys like you and I have been talking about the little by little by little till we're blue in the face. And to our own sanity sometimes, to the detriment of our own sanity. But I think if you really start and stop and internalize it a little bit, something of this nature, a once in a generation shift of crossing a Rubicon of, historical precedents, it won't be easy. Most people won't have seen it clearly. That's just the way these things go. And only very few people who have taken the initiative to do things of their own volition rather than following the herd will be the ones that benefit. And that's why you have very few legendary investors. And if you took the common denominator from almost every one of them, it would be that they did things everyone thought they were idiots to do. Buy things that when everyone was, I don't want that, and selling it. And that's how you make a lot of money. Well, what are we taught when we're little kids? Buy low, sell high. But it might be the hardest thing in the world to do. It's very hard to buy high when conventional wisdom says you're an idiot. And it's even harder to sell, or buy low rather, when everyone says you're an idiot. And then to sell high. Buy low, sell high. You know what I'm trying to get at here? It's very hard to buy low when everyone thinks you're stupid for going down that road. I've been there many times myself. I sold my house when I had a brand new little baby in the middle of winter in Minnesota, and rented almost to the detriment of my marriage. And all my friends thought I was an idiot, but they were building houses in my neighborhood that were bigger and in the same school district for 2/3 the price of my house. So I did it. I sold the house, and it was a very scary thing to do. Everyone said I was an idiot. I put all my money, the equity, about $250,000 into silver at $9. And I sold it at $44 and built a dream house, turned it into $1 million. I followed my gut. I did what I knew was right. I didn't listen. I'm not a legendary investor, but I'll tell you damn what, that's how legendary investors are made. They do things out of their own research and their own volition, and they do not follow the herd, because the herd never wins. The legendary investors do things that everyone thinks is crazy. Look at what's his name from The Big Short. Everyone thought he was crazy, and he became a gazillionaire because he saw it and knew it. But that is the truth of it. If investing were that easy, then everyone would be gazillionaires. No, you have to buck the trend. You need to buy when there's blood in the street and sell when everyone is frothing at the mouth for it. Really hard to do in both instances, and equally as hard to convince people that a system that everyone has known for the past 3-4 generations in this country is coming to an end. And yet those who listen to you and I, and hopefully you and I, will be positioned appropriately and in the right place when this change happens. And people say, well, how the hell did you know? Well, how the hell did you not? And that's the sad part of it all, is that our success, Chris, yours and mine, will come at the expense of everyone around us who we love and care about, because they will be run over by what they did not ever see coming. And you and I can sit and go for walks like we did the other night and beat our heads against the wall, wondering how, is it us that is crazy, or is everyone else around us just have their eyes closed? And I think history will tell you and show you that there are very few people who have their eyes open. And if people spent as much time trying to preserve what they've worked their ass off their whole life to make, they would be much better off. It's a very interesting phenomenon where we spend literally, 40 hours a week, let's say, for our entire life, really, most of it anyway, working to achieve something, to build a nest egg for our family, to provide for our kids and our family and our future generations. Yet, when it comes to saving it, investing it, we give up, and we give all of that authority and autonomy to somebody else who doesn't care quite the same way that you do when you realize what would happen if you made a misstep with all of your life's efforts. And I find it to be wholly crazy that people do that. And so that's why there are very few people that really ever win in investing. And I think that's the difference. And that's why I appreciate guys like you who go out there and constantly, even when it's not visible to everybody, and say, this is what's coming. And hopefully people take the time to listen and do a little bit of due diligence and a little bit of research, and not rely completely and totally upon an advisory that, doesn't have the same vested interest that we all do with our own funds.
Gold and silver prices relinquished mild overnight gains and are facing modest selling pressure in early U.S. trading on Friday, spurred by a hotter than expected U.S. inflation report. The latest U.S. Producer Price Index report for January revealed a 0.3% month-on-month increase, with the core PPI, excluding food and energy, up 0.5%, surpassing expectations. This was partially offset by a U.S. housing starts report for January, showing a 14.8% decline, contrary to expectations. Mixed performance was observed in Asian and European stock markets overnight, with U.S. stock index futures anticipated to open on a mixed note. Additionally, the Wall Street Journal highlighted a concerning trend where the U.S. government is projected to spend more on interest payments than defense. In the broader markets, the U.S. dollar index surged after the PPI report, while NYMEX crude oil prices weakening at around $77.75 a barrel. The yield on the 10-year U.S. Treasury note rose to 4.322% post the PPE release. Notable U.S. economic data slated for release includes new residential construction and the University of Michigan Consumer Survey. Hit the like button to let us know you're enjoying the video. Let's get back into the best clips of the Rules interview.
Money supply falling off a cliff, or the commercial real estate problem, the election, the border problem, the recession wave, if you will, that's happening all around the globe. This is not ending. This is just beginning. And whether you see it in Great Britain or in Japan or all around the country, here coming to the United States, Germany, and then you look at the layoffs that we're seeing. I mean, look at all of the companies that are laying off 20,000 people out of Citigroup, 12,000 people out of UPS, 35% of the Twitch workforce, 20% of the Hasbro workforce, 15% of the Xerox workforce. Go down the line. Wayfair, 13% of its workforce. I mean, go on. Not eBay, 9% of its workforce. It's not just traditional businesses. There are a lot of tech businesses in there that are laying people off, and this is only accelerating. And so, yeah, I think that a recession, I think slowdown, coupled with the M2 money supply falling, coupled with the reverse repo, these are all very, very scary things that I think ultimately put greater strain on the banks, put greater strain on the economy, and will only, I think, accelerate this event that people see coming with the banks and the consolidation of the banks, which will then start to also greatly, I think, affect the commercial real estate market And think of all the businesses that spring up around all of the big buildings in the inner cities that are already experiencing crime and lawlessness and mass exodus. Over $1 trillion worth of businesses left New York City in the last year. And why would they stay there after what we see happening there? And more business leaving these cities, making the commercial real estate that much worse, hurting the small businesses around there that much more. And who owns all the loans? But the regional banks. Well, what does the modern monetary theorist want? I.e. the number 2 in charge, Lil Brainerd at the U.S. government, the consolidation of the banks. And this is exactly how you do it. You incentivize people to overextend, whether it be in their business operations or in their asset purchases or whatever it may be. And then you raise rates 11 times in a year and a half or whatnot. And now they're talking about not maybe pivoting. In fact, you got Lawrence Summers coming on saying, I think they're going to raise rates. Well, we've been saying that. We've been saying they're not going to lower rates. They can't. If they do, they've lost all credibility. And now inflation is hotter than they thought. So are they actually going to raise rates next time? Which is going to put more strain on the banks and more strain on the commercial real estates. It's a doom loop. And I think people are way too complacent right now. They're sitting in the eye of the storm thinking all is good. Soft landing is coming. No, it ain't coming. But by the information, when you look at these massive layoffs and then you look at the BIS, let's take the I out of that and just call it BS, saying that 300,000+ jobs were issued in January. They will come back and revise those numbers. But at the same time, we're seeing massive good paying full-time jobs being shed in favor of 2 or 3 part-time jobs to make ends meet, blurring the reality of these employment numbers. And I don't even need to go down the road with inflation, but I'll tell you, inflation is here to stay, and I think it only gets worse moving forward, putting even greater strain on this whole system. Then rates got to go higher than the whole thing. I mean, you can see it's a doom loop.
What do you think of today's episode? Do you agree with Andy Schectman? Do you feel secure with your savings in dollars? Post in the comment section down below your insights on the video, especially if you'd feel safer having crypto than money in your bank account. Thanks for watching it to the end. Take advantage of the massive sign-up bonuses to get crypto. If you have not yet done so, subscribe to the channel and check this upcoming video because you'll love it. I see you on the other side.